Next 12 to 24 months, I'm kind of afraid. I think I squeaked in October, but it's just gone nut bar factor 6 right now. Hey everyone, my name is Mike Andes. I'm the founder of Augusta Lawn Care. We have over 85 locations around North America. Today I'm going to be talking to you about how throughout COVID until last October of 2021, I was able to get 20 units of rental property, and how I sold out half of my stock portfolio at the very top of the market, and how I'm making a re-entrance into the market now that we have a big fear catalyst of war as well as high interest rate. If you go back to October of 2021, you can watch this video here where I talk about me selling out of the market. I was going to sell half of my stock portfolio, ended up selling about 60% of my stock portfolio, and I was moving that into real estate. I'm going to talk about why I did that in just a second, but let me go back to April and May of 2020. That's right here on this graph. Now this graph here is kind of the general overall what the stock market has done over the past couple years. Big dip here during COVID, spring of 2020. Now, once I saw that the Fed was going to step in here at the bottom of the dip, and they promised to basically, cut interest rates down dramatically, and they were going to buy a whole bunch of bonds. Well, in that case, that's when I went ahead and entered the market, and I put in about $300,000, a little less than $300,000. That I was, sitting in a bank account, was making like 0.25% on interest. I put that money in. Now, over the course of this time, I grew this to about just over $1 million in the stock portfolio. But throughout this time, I leveraged that portfolio and I leveraged that asset to go buy real estate. Because when you can show that to a loan officer, say, look, I got $500,000, $600,000, $700,000 in stocks in a portfolio and they're liquid, you can really use that to go get some real estate. So in this period of time, I got 20 units of real estate. Now, if you go back and watch the videos that I made throughout this period of time, I said very specifically, the reason I am getting this real estate is because I feel like the equity is going to go up. I'm going to force appreciation by raising rents, improving the property, buying these properties when in our state no one wanted to buy because landlords could not evict. People were trashing the units. It was a mess. So I was going to buy those up, improve the properties, raise rents, improve the value, gain equity, and then take that equity and use it as a way to create leverage that I could use to really grow my businesses. Because I already knew back here that we were going to need a couple $1 million for Augusta Lawn Care, either from an investor or someplace, because when you start growing to a certain point, you need a lot of capital to keep investing in the infrastructure and the software, and you're not profitable yet, and we still aren't. And so throughout this period of time, 20 units of rental property is what I got. Equities were all increasing. We raised rent substantially. But right here is when I got the second of these 10 units. So I got 10 units here, but right here, I got 10 more units. This is the kind of capped off another 10 units. What I really should have done here is I should have said, this was just 10 units, okay? So I got up to 10 units right here, and then I bought another 10 units here. Now at this point, what I said in October of 2021, and you can watch the video right here, where I stated that I'm selling out half of my stock portfolio and I'm moving that into this 10 unit apartment complex of real estate. And I said so because I truly believe that 2020 was going to be a lousier year for the stock market after 2 very, very hot years, massive gains in the stock market. I believe that this was going to be a hard year for 2022 for a couple reasons. 1, inflation. 2, because it was very hard to compare the sales of 2020 against 2021 when everything was going so well. Back in 2021, when there's tons of stimulus money, people were spending like crazy. Yeah, it's really great to have like 30-40% growth in these companies, but I believe that once stimulus kind of wore off and rents had to be paid again and student debt had to be paid again, that people were going to spend less, and therefore the comps or the comparables of companies compared to last year was not going to be like incredible. And so that's why I sold off more than half of my stock portfolio, moved it into real estate. But again, I'm not like a real estate person. I'm not a stock guy. I love business. I use these as vehicles to take my cash. Instead of sitting in a bank account losing 7% a year to inflation, I want it to work for me. So here I sold out over half of my stock portfolio, moved it into real estate. This one real estate deal, I'm just gonna look at this one because these 10 units have done well. They've actually done substantially better than these ones because I've had them longer. However, let's just look at this 10 unit deal that I bought last October, all right? This one deal, I put $1.8 million in terms of the purchase price. I put over half, about half, I should say, $800,000 of equity, or I put cash into this deal. So $800,000 I put down in the deal, got $1 million worth of debt. I then have put since a little less than $100,000 in improvements. So fixing the building up, cleaning it up, fixing the parking lot and all the rest of it. So I'm in on this deal, let's just say 1.9. Okay, now in terms of cash, about $900,000 that I'm in on this deal. Because I invested in this property, fixed it up, improved it, raised the rents by 50, 60, 70%. By doing that, I believe that the property's value is probably at least $2.5 million right now. I get at least. I think if I put it on the market right now, we would sell it in a heartbeat. Problem is, if I did that, I would be taxed literally on like $600,000 in gains, and it'd be short-term capital gains because I literally just bought it several months ago. I don't want to do that. I'm not really interested in selling real estate. But the really cool thing is, now that I have all of this equity, because remember, I put about $800,000 into this property of cash. What that means is I have about $1.7 million in equity on this property. And this is what we're using to leverage and take money out of the property. Because guess what? If I sold this, I would have to pay taxes. If I take out a line of credit or a loan backed by this property, I can take it out for 3-4% interest. It's not a taxable event. I got all that money back, not a taxable event. And furthermore, the interest that I pay on that loan is now a deductible line on my taxes. I get to actually expense it as, take it against the income that I make. So what we're doing right now is I am taking a loan. And I stated this in the video most recently. I said I'm taking over $1 million worth of debt. All of that is backed by my real estate equity. Okay, now that's just this one deal, the 10 units here. I have more equity in these other units here, but what I'm doing is I'm taking lines of credit out on these properties against my home equity, against the equity of that real estate. And it's gonna be at 3-4% interest. It's over the course of 30 years. It's great debt. And what we're going to do is invest that into the business, because I truly believe that that's where my next outsized returns are. Right here, big opportunity in the stock market. Throughout this whole period of time, lots of opportunity in the real estate market. I'm not buying real estate right now. I'm not buying it anytime soon. It's extremely expensive. Lots of, you're paying an ultra premium. I don't feel like you're gonna be able to do what I did here in these next 3 months, turn a property into $600,000 worth of equity like I did here. I don't think that's going to happen right now. I think I squeaked in October, but it's just gone nut bar factor 6 right now, and mortgage interest rates are going up, which means my returns on a monthly basis of cash flow is decreasing. This is what's really interesting though, is right now I see this opportunity because we've had the war and some massive fear of inflation and rates going back up from the Fed, and so the stock market's come back down. And so I have to ask myself, okay, I predicted that this would happen, we'd have a bit of a crash or a bit of a downturn in the stock market, and I'm happy I sold at half my position. If I would not have sold out that $600,000 of this portfolio here, I would have lost about $250,000 just in the past few months. So now the question is, okay, I know in the long run I took out this loan for the business and that's what it's going towards, but how can I raise cash right now? Because right now I feel like there's a lot of opportunity in the market to buy some of these companies that are 60-70% down, and I think that could actually go a little bit further down. Could I potentially get some cash and then ride up a short-term wave before we probably come back down? I think in the next 12 to 24 months we're going to have a reckoning with inflation. We're going to have a reckoning where we have to raise interest rates substantially, and that will eventually, in my mind, potentially lead to a potential recession or a big downturn, or a very long period of 4 or 5 years where we don't really have a lot of returns in the stock market. But I truly believe there's going to be an opportunity here in the next 6 months. Knock on wood, the Russia catalysts go away of fear, as well as the fact that we aren't going to get rug pulled by the Fed and they're not going to jack up interest rates by 5%. If that does not happen, there's a very good chance that in the next 6 to 12 months we have a really nice kind of bounce back on the stock market. So what am I doing? I'm selling the gym. Now, this is not simply because of this. I was planning to do this anyways about a few months ago, already starting to plan this. But what this is going to do, it's going to allow me to have cash right here. I've paid the gym off. The gym was paid off, and it's gonna give me almost $600,000 worth of cash to go and put in the market. Now I'm not gonna put all of my money in the market. I'm gonna take about half of it though and put it in the market, because I feel like right now there's some really good opportunities in the market in terms of companies that have gone down 50, 60, 70% from their highs and are now actually good value plays. Like Facebook is at like 13, 14 times earnings. That's crazy. A year ago, they were at 40, 50 times earnings in terms of their valuation. I think there's gonna be a good opportunity here to take my, $300,000, $400,000 that I put in the market, turn that into $600,000, $700,000, and you say, well, what are you gonna do with that? Well, that is going to help pay off some bad debt. Now, I don't think it's bad debt necessarily, but it's interest rates that are higher, because this interest rate down here is about 3 to 4% against my real estate. It's over the course of like 30 years that I'm able to pay this thing off. Great debt. I love that. I like long-term debt, and I like low interest rate debt. That's fixed interest rate. I love it. You're not gonna beat it at 3, 4%. It's fantastic. But what we are doing also is we're taking almost $3 million worth of debt for a building, an SBA 504 loan. Problem with that is I'm not gonna be able to fix my interest rate until we're done the building project at the end of this year. And I would not be surprised if my interest rate is over 6% and nearing 6.5%. Right now it's like 5.5, but with the way interest rates are going, by the time I lock in my rate, it's gonna be short term, 10 years, and it's probably gonna end up being like 6% interest. So I wanna pay that bad boy off. Over the course of the next 12 months, as we're building this place, I'm gonna be trying to look for arbitrages in the market to put my capital from paying off the gym and then selling it, which I'm gonna make about $600,000 in cash. And I'm going to try my very best to actually pay off the 504 loan over the next few years instead of this great debt that I got against the equity in my real estate. Okay, so that's the plan. If it was way over your head, don't worry about it. Watch my videos though about business. I love business. This other stuff with real estate and equity and the stock market and kind of more of a trader's mentality of, hey, I feel like we got a good opportunity next 6 months in the stock market. Next 12 to 24 months, I'm kind of afraid. There's a really good chance in 6 to 8 months, I'm probably gonna make another video saying, all right, I'm selling all my stocks. I'm getting out, I'm taking that cash, and I'm gonna either wait on the sidelines or I'm gonna go put that towards debt that is at 5, 6, 7% interest by that time. I'm not going to pay off my 3 to 4% interest. That's gonna be the next 30 years, and I'm very, very happy to have that long-term, low interest debt. In general, any debt that's under 5% interest, I want as much as possible as long as I'm buying assets that cash flow with time and have a good return. And I believe my business is a great vehicle for investment and building my net worth and can kick off great returns in 5 or 10 years. Far beyond the stock market or real estate, that's why my main focus is the business, but in the short term, to raise capital and make sure I don't have to go out, get outside investors for the business, I'm playing the game of real estate and the stock market to raise capital and make sure that we have enough cash on hand. I hope that was helpful. This is maybe not so much for you as it is for me to be able to look back in 10, 15 years and smile at these numbers and how we kind of thought things out. But trust me, knowing the market and the macroeconomics is good for your small business. I don't care if you're a landscaper, a roofer, a contractor, a cleaner. Stay abroad, stay abreast with what's going on in the economy. Stay abreast with what's going on in inflation and interest rates. These things can affect your business. They affect the labor. They affect how much you have to pay for labor and where marketing is going. What is going to be the best opportunity to spend money on marketing? This is something I'm thinking about a lot with Augusta Lawn Care. What is 2022 going to be when it comes to marketing and hiring? And these are the trends that move the needle. When Fortune 500 companies start moving their marketing budget and moving how many people are laying off or hiring, that is going to affect your small business. And if you look at last month when I shared the numbers about small business in America, you could see how just mad I was and frustrated by the fact that, the headline was 500,000 new jobs added in America. In that time, when they broke it down by sector, in that same time that we had a positive net of 500,000 jobs, small businesses lost almost 100,000 jobs in that same month. And the reason for that, in my opinion, is because many small business owners are not looking at the economy and seeing where are the opportunities? Where can I move my money to get a better return? How can I look at macroeconomic trends that I cannot affect? I am just a player in this game, but if I want to win in this game, I've got to understand inflation. I've got to understand the stock market. I've got to understand real estate. And so educate yourself. Learn this stuff. It's not easy. It's a long-term game. I'm not telling you to go invest in stocks right now. I'm not telling you to go go invest in real estate. But start the process of educating yourself so when you see an opportunity, when you see the chance to get out of the market or get back in, that is your time to pounce. But you've got to be educated. Before I invested here, I spent 5, 6, 7 years educating myself about real estate and stocks and returns and macroeconomics. I went to business school. That was all part of my education to be able to make this happen. Never forget that I don't care if you got a college degree, I don't care if you graduated high school, you can learn. Podcasts and books. Like I wrote this book about P for P, pay for performance, why hourly is a failing formula. Read it. It's $1 on Amazon. This is the way to educate yourself, create outsized returns, and set yourself up for your family, your business, and for your future. I'm Mike Andes, and we'll see you tomorrow.